Okay, so how do we account for discontinued operations? This will just be an example of that. So let's say we've got a company that has loss from operations of the discontinued division, and the operating loss was $300,000. So maybe it was sold in October, November, and it had had an operating loss all year, and we have to account for that. And then there's a loss from the sale of the assets of the discontinued division. So these are the actual buildings and plant that was associated with it. And so this is what we would be typically given. These are the losses or gains, it could be either one, and we have to report them net of tax. So we would typically be given the total amount of the gain or loss and the tax rate. So now how do we figure out net of tax? You simply take the $300,000 and multiply it times the 30% or whatever tax rate it is. And so the tax impact there would be, I just want to make sure my numbers are correct here. Oh, okay, so it would be, the tax on that would be $90,000. Okay, so that's the amount of the tax. And so the net of tax amount, you take the $300,000 total loss minus the $290,000, and so the amount we're going to report of the loss is 300 minus 90, or 210. We do the same thing with the loss of the sale of the actual plant assets. We do the 120 times 30%. And so let's see, there's no way I can even pretend to know that number. That would be 36,000 tax. So if you go 120 minus 36, that gives you 84 net of tax. These calculations, it doesn't matter whether you're dealing with a gain or a loss. Either way, they provide you with the net amount, you know, because the tax, it's going to be a tax impact one way or the other. Okay, so now how do we actually report this? We have the information we need here. So we have our income from continuing operations, it would be, say, $100,000. And now we come to the discontinued operations section of our multi-step income statement. So you have to imagine the whole multi-step income statement is up above there somewhere, and now we're down to income from continuing operations, and now we're going to report our discontinued. So the first thing we'd say is loss from operations of the discontinued division. And when I'm doing these, a lot of times I put the numbers in just because it's easier, but you can just report them net of tax. We go net of tax impact of the 90,000, and so you would report the loss of 210. Okay, and then we do the loss on the sale of the assets of the discontinued division, and the total loss would be the 120. Net of the tax impact would be the 36, and so the loss on that would be, we would report, is 84,000. Okay, so we have a total loss from our discontinued operations. We total these two amounts, and that would be, no, actually that's not the way I did it. We'll just, we take our income from, our loss from discontinued operations. Okay, so 210, 84, I'm terrible at math, so you know. Okay, so what would be a loss from discontinued operations of 294, and then we would add the, we had 100,000 net income, or income from continuing operations, minus this, so we would end up with a net income of the negative 194. Obviously, they need to start doing something different. Yeah. So the main points they need to know is you'll be given the loss or gain, the total amount, you'll be given the tax rate. These have to be reported net of tax, so you do the total gain or loss times the tax rate to get the tax. The total gain or loss minus the tax gives you the net amount, okay? And then you can work out a format that makes sense to you, but this is the information that needs to be provided when you're doing discontinued operations.